Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in here. Let's see what's going on, and I'll interject my financial opinions. If you want to follow me at finding_finance, and if you want to join our community, fighting-value.com, where we dive deeper into individual companies, individual sectors, and I do a lot of trainings and talking about how to become a better investor with the experience that I've gotten over the past 15 to 20 years. So we've got RevCap here. He says rates are not high enough. Until they are, home prices are going to keep going up. If rates pull back on midi stuff, home prices are going to take another leg higher. That is my opinion as well, is if we get any sort of relief on mortgage rates, that home prices are going to go up. So this is the data that we're looking at. It says home prices are staying stubbornly high because there's enough home buying demand to prop them up. It says our home buyer demand index is at its highest level since last July. Home tours are up 33% since the start of the year, and the median sales price is up 4.5% year over year for the 4-week rolling average of the median sales price of homes sold. I've been hearing a lot of housing bubble people since 2020. Housing bubble, housing bubble, housing bubble. Oh, interest rates and affordability went down in 2021. Housing bubble, housing bubble. Guys, it's not a housing bubble. You cannot have a housing bubble with no inventory. And prices are remaining quite resilient. Another 4.5%. Coming on down, metals, weekly price performance, tin, absolutely killing it. I know some people were asking me, do I know any companies that are in tin? Probably because the performance here has gone up, and I just know one company that for tin. So I mean that's where I'll end it there. But we've got zinc also up 6.5%, platinum up 5.5 or 5.25, palladium's up 4.5. I actually like platinum and palladium. Platinum looks really good here. I think platinum looks excellent, 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 excellent. It deals with the pattern and on top of it, the valuation ratios. Platinum is the cheapest metal. Coming on down, Palo Macro, let's read into this. There's 7 posts here. He says, putting this here rather than behind a stack paywall and doing it before 6 p.m. because I'm seeing really, a lot of really crap takes on why this was a nothing burger since Iran didn't hit anything major. All bark, no bite. And so gold and especially oil should be faded. He says, I think people who are thinking this way about oil in particular are scarred by 3 successful physical dumps over the past 2 years, and that is martingale thinking gone array. Um, Russia invaded, and Biden that summer cratered oil with a historic centimillion barrel sale. Oil tried to rally fall of 2022, and Russia smoked positioning with the 40 million barrel crude dump in November, December of 22, followed by 40 million barrels diesel. Positioning took months to rinse. Third quarter 22 rally into October 7th, and Iran sold something like 80 million barrels of crude and naphtha on water. Fourth quarter 23, it plunged. People are now conditioned to thinking that geopolitical catalysts are sell the event opportunities. But they miss the fact that the physical market was previously sold aggressively. Correlation does not equal causation. The real question is, where do you think the sale of physical barrels is going to come from in the aftermath of this strike? Iran already discharged nearly all floating storage. If you think tighter sanctions enforcement isn't coming to them, I want to know what you're smoking. So, where are these physical barrels coming from that are going to run this market over to the downside? Point them out to me, and I'd be happy to revisit the whole sell the news nonsense. Is there spec length in Brent? Yes. Have we drawn counter seasonally in quarter one? Also, yes. Are we now coming out of global maintenance with inventories below historical averages into the teeth of a manufacturing revival? Also, yes. So please, let's cut the crap about this geopol is a fade. If you don't have a physical overhang, you're not rinsing spec positioning. So what he's saying is every time we've had a geopolitical event, we've had these massive barrel dumps that occurred after a lot of these news. Right now, in his opinion, and it would be my opinion as well, we don't have the barrels, the physical barrels to dump on the market to suppress the price anymore. Could we do a strategic petroleum reserve dump? It is still possible, yes. But the world has really drained its inventories. What I'm looking at is what is shale oil going to do? If shale starts to fade here, good luck with pricing, keeping the pricing low. I think we're going much higher if that is the case. We have to see what occurs over the next year or so for production around the world. So this is Andrews. He says, I try to keep learning and updating my uranium investments continuously. The more I learn about some companies, the more risks I tend to discover that make me feel weary. I will comment below on all these different things, and I'm not going to dive too deep into his comments, but the one thing I will say is I try to put everything into perspective. And that perspective is we've got high interest rates, the borrowing costs are going up, and a lot of these companies have to spend a lot of money to create or to build the mines that they are trying to build. It's going to be costly. So you're either going to borrow money at high rates with a very inflationary environment. Remember, the costs are probably going to go up a lot. Then you also have on top of it, if they don't raise rates, they're going to probably raise money by share dilution, unfortunately. So every investment that I look at, it's all investments competing for my money. And there are other sectors like oil and natural gas that will will not dilute you. They're going to actually be making hundreds of millions of dollars with very fast and growing free cash flow, and they're buying back shares. So that is what's competing. It's like, do I buy something that is a developer where I know they're going to dilute me, or do I actually pick up this really cash flow rich company that is inflecting positively and going to buy back all their shares and give me dividends? And that's what's competing for my money. I'm looking at both of those things. Now, I don't think having no money in this, I don't think it's a good option. And I don't think putting all your money in it is a good option. I think position sizing it correctly, and I do think that uranium is going to go up dramatically. The physical pricing and probably the developers and money flows will come into this sector. I agree with that. But at the same time, I'm looking at uh, a lot of different options and possibilities with companies that are going to buy back shares and have massive free cash flow with infrastructure in place. It is very hard for me to overlook that. So, yes, I've got some speculative positions in uranium, which is basically the entire sector almost. And then I've got a lot more money in oil and gas and these big cash flow share buyback companies. So here's Julian. He says the ratio of gold versus the S&P 500 is once again testing decade-long support. If the big one, it breaks, and he's talking about the support line here, if this breaks to the downside, the key question is the nature of the decline. Is it nice or nasty? Nice is gold goes up, SPX is flat. Nasty equals gold goes down a bit and SPX goes down a lot. Um, I don't know which one it's going to be here. I have a tendency to think that we could pull back the nasty style with the S&P and Nasdaq. The valuations is what makes me think we could get a little bit of a nasty kind of pullback. It's possible. But on the other hand, we are in a presidential election year, and I know that they're going to try to hold this stuff up. So who's going to be right here? Are we going to get gold that goes up because of money printing? That sure seems like that's possible too. And what it leaves me with is, the statement that I just don't know here in the short term if we're going to get a nice pullback where gold goes up and SPX is flat, or we get a nasty one where gold goes down a little bit and SPX goes down a lot. I kind of think that they're going to try to hold this thing up, and I think that gold's going to go up and SPX will be flat. That's going to be my guess. But again, we'll see what happens after the election, because that could be the second portion where gold goes down a bit and SPX goes down a lot. So coming on down, we've got Tracy here. It says at a Brooklyn pawn shop, customers are flooding in to sell gold. She said, well, the quote is, people are using gold as an ATM they never had, said Gene Furman, owner of King Gold and Pawn. Says at Furman's Fifth Avenue store, the number of people coming in selling and pawning gold jewelry is more than 3 times above normal levels since prices started to rally in late of February. Among them is Brandon Sabino, a 30-year-old IT specialist who sold a gold necklace and a gold ring last week. He said, prices are high and I need the cash, he said, adding with that the cost of rent, groceries, and car insurance rising. I don't have any savings. I actually think a lot of this is coming out of the woodworks here, guys. I think a lot of people are selling silver, gold, because they're trying to raise cash for living expenses. And I think this could go on for a little while where people had purchased this stuff and now they are starting to sell in order to survive. So yeah, I do think that there could be a lot of selling that does occur because people have to, they're forced to. So here is one. It says it's weird. It's a weird thing being richer than your boss. That's happened to me, I would say, the past few years. And I would say that that's probably true even of my boss's boss's boss, or something on the lines of that. And it is kind of weird because as you either gain more income or more wealth or the combination of those two things, you start looking around like, why should I take orders from you when I'm making 2 times, 3 times the amount of you? It does get a little bit weird. And then you start questioning, why do I still work at this place if they're not really paying you that much? You start asking all the questions and you start asking, should I take my orders from these people? It's not about being richer necessarily. It's more about just you gain a different perspective about your job if you don't need your job. A lot of people, they get into debt and they need the job, so they just plow through it. But if you don't need it, then the question is, well, why am I doing it? If you don't need it. So I think, in my opinion, you want to be in that position. You want to be in the position where it's kind of like, do I really need this thing? And then you start questioning, is this job really that great? Should I go get another one? Should I, it gives you options, is what I'll say. Here's real John Perez. He says silver at 125, gold at 3,000, crude oil at $150 a barrel. These numbers look fine to me, is what he says. And here's a thing, gold at 3,000 and oil at 100 by 2025, says Citigroup. I think that's very possible, easily. And then here, he's got silver tracking cocoa and a potential move popping up in silver. If that were to repeat, it looks like it would go to 250. But I think what he wrote on there was 100 or 125. Yeah, I think it's all possible. But here's the thing, guys. When I look at this, all these people throw out numbers. I don't really care what the numbers are. It doesn't change my strategy. It doesn't change my approach. Is silver undervalued? Is gold undervalued? Are they inflecting positively? Is crude oil doing well and breaking out? The answer is yes to all of it. So why does it matter if we know what the ultimate necessary outcome is? Uh, I don't necessarily look and focus 100% on that and put a time frame on it. What I do is I look at it and I say, is this cheap? And what other opportunities in the market are better at this time? And I can't come up with anything. So silver breaking out of this downtrend line on silver, yes, it's going to go way higher. Do I know the exact price? I don't, but I know that it's cheap. And I know platinum's cheap and that's ready to break out. And I know crude oil broke out of its big long consolidation from 2008 in 2021 it broke out. So I'm looking at this like, yeah, this all looks absolutely fantastic. So what I think people do wrong is they put these price targets and then they put a time frame on it, and then it doesn't hit that time frame. It's almost like they've got some sort of expectation. Like their expectation is silver is going to rip to 125 by the beginning of 2025, and it's like, you know what, guys, you're going to have to be more patient than that. It's going to come, and it could be violent and it could be rapid. It could be. But what if it isn't? And what impact does that have on you and your portfolio? And what I look at is, well, it's cheap and I'm going to hold on to it. If it doesn't occur, I'm going to wait until it does occur. I'm a pretty patient person, and that's why I don't put all my money in all of, in all of silver or in all of gold. I think that's another problem that a lot of people do. Is what they do is they try to put everything in one asset, and then they get mad if that asset doesn't perform under the time frame that they made up in their head. But if I buy all of the best, cheapest, highest risk reward bets. So if platinum's good, I'll own platinum. If silver's good, I'll own silver. If crude oil's good, I'll own crude oil equities. And you create a portfolio of these 7 or 8 different undervalued assets. And some of them will go, and some of them may lag behind. And it's not a big deal because you're capturing the gains in a good chunk of the portfolio. That's why you diversify a little bit. Here's Cuppy. It says, I've already warned Israel that NYMEX oil futures open at 6 p.m. Eastern Standard Time. So we're good, guys. We're good. Attack on the weekend. Don't do it while we've got, open markets. Do you agree with this article from CNN? It says, I cannot afford to live. Gen Z is full of financial angst despite inheriting a golden job market. I think well, this is what I'll say here, guys. I see families, and my daughter is in a she's in a cheer. She does cheer, and it is somewhat expensive. And my question is, I'm looking at these other families. I'm going, how are they affording this? I've been saving, my entire life and putting my money into investments and getting dividend income and doing all these things, basically set my life up well. And I highly doubt that most people have done that. So I'm just like kind of looking around like, I wonder how they're affording, raising multiple kids, having their kid in cheer, going on some vacations for that, and then buying food and all this other stuff. So I can't imagine the younger generation. I know what some of them pay. If you're getting paid low 20s to mid 20s, it's a struggle. I am empathetic to that position. So yeah, I think it's real tough. Kobayashi letter says, just in, U.S. credit card delinquency rates are now at their highest on record. In fourth quarter of 23, more credit card balances were 30 plus or 60 plus days past due compared to any other period in history. The percentage of credit card balances at least 30 days past due is now 3.5%. Meanwhile, total credit card debt has skyrocketed in recent months and is now at a record of 1.3 trillion. The average credit card interest rate is also at a record of 28% according to Forbes. Credit card debt is not the solution to inflation, and it's just ripping higher here. So that's pretty sobering. I don't like seeing that, and I don't wish anybody to be in, hard times kind of like we are. Amy says, "Good morning, everyone except rich people who think they are not." So it says, Aaron Littles of Tampa, Florida says he feels unfairly targeted by the $400,000 cutoff. Says, "I don't think of myself as rich. The Americans crossing Biden's $400,000 tax line." Well, what I'll say there is it depends how you make that $400,000. There's low tax ways to make it, and then there's ways where you get absolutely smoked in taxes. If you're making $400,000 in a W-2 job, you're going to get smoked. Like the taxes are going to be ludicrous. And if you own a business, you can at least create an S corp or something like that where you're still going to pay a lot of taxes. And I don't think a lot of people realize even if you make 400,000, there's a lot that goes to taxes. It is not, oh, what I think a lot of people do, a lot of people who don't make a lot of money, they don't pay any taxes. They pay zero. Now, when you make, I'm just going to make up, $400,000, they might be paying $75,000 in taxes across the board. That's state taxes, federal income taxes, and all these other taxes. Is 75,000. So let's say you're walking home with 300,000. Let's say you've got a family and you've got all these costs. Let's say your costs, um, if you're not super cheap, are 100 to $150,000 a year. So you've got 150,000, I would say, of wiggle room capacity. But does $150,000 of spare capacity, so to speak, free cash flow, does that mean you're rich? I wouldn't think I mean, if you save it and you do something with it, yes. But to me, that doesn't automatically mean that you're rich. It depends what you do with it. If you take that 150 and invest it, then yes, you can become rich because that money is going to generate even more cash. And it'll increase your 400,000. But if you're spending it and you're buying expensive cars or you live in a very nice house, I could see how 400,000 in a family of, let's say you've got 3 kids, could be eaten up quite quickly. And it's not as rich as what most people think. That's what I'll say. Barclays, global oil balances are in deficit until 2025. So these are the deficits of first quarter, second, third, and fourth. Then it states that we go into a surplus quarter one of 25 and quarter two of 2025. It looks like we don't really have a balance here in quarter three, and then we go into another deficit in fourth quarter. So we're going to be eating through inventories for oil over the next year. Over the next year. What is the primary reason you own precious metals? The primary reason for me is to get money out of the system. I don't like counterparty risk. When you have money in a brokerage account, the brokerage firm is counterparty risk. A bond has counterparty risk known as the government. And you've got these counterparty risks, and precious metals do not have that. So what I do is I try to get money out of the system and reduce counterparty risk where I don't get blown out from a system problem. So that is the primary reason that I own precious metals is to diversify away from the system. And that is what we've got for today, guys. So give me a thumb up for the content. Subscribe to the channel if you haven't. Subscribe to the website if you like. We still have LEAP coupon code LEAP active, 50% off the first month if you want to try it. Or you can go to the yearly membership and get a larger savings there with that coupon code. You could be an existing monthly member too and swap to a yearly if you'd like. But that's all I've got for today, guys. We'll catch you next time. This is Finding Value.